Welcome to this video. I am Ganesh, Faculty of Financial Accounting at Annamacharya Institute of Technology and Sciences, Tirupati. This video helps you to understand the following contents like definition of accounting, concepts of accounting, and principles of accounting. And we get back into the introduction of the accountancy. Accounting is an art of identifying, recording, summarizing, and interpreting business transactions of financial nature. Accounting allows us to see things like how much money you are earning, how much money you are worth, and how much money you spend and where you can improve to make even more money. And this accounting is a language of business also. Especially this financial accounting is a specialized branch of accounting that keeps track of a company financial transactions and presented in a financial report or financial statements such as income statement or a balance sheet. So in this slide there are two definitions related to accounting given by the American Accounting Association, and another one is American Institute of Certified Public Accountants. They are well defined, these lines about the accounting, and helpful for judgments and for taking decisions based on the economic information. And second one is the primarily financial nature and the economic entities too useful for economic decisions. And we'll move to the next slide. Bookkeeping. Bookkeeping is the recording of financial transactions and is a part of the process of accounting in business. Transactions include under the bookkeeping is purchases, sales, receipts, and payments by an individual person or an organization. There are several standard methods of bookkeeping. It's including two types, single entry and double entry system. These are all two types of bookkeeping systems. While this may be viewed as real bookkeeping also, it's a process of recording financial transactions in bookkeeping process, and it is a kind of a work of a bookkeeper, the person who records a day-to-day transactions related to the business. Those person we can call as bookkeeper. It's a very simple to record the day-to-day transaction, so this process we can call as a bookkeeping. Single entry system, this is the first method under the bookkeeping. So in this method they are bookkeeper maintaining the records, and it's like a sole proprietorship and partnership forms also, it will be helpful. And this system does not require high knowledge and expertise for entering the transactions. Whatever the transaction will be happen in a daily business, then we can simply make a note in the notebooks. So it's very simple for single entry system. From old age it will be going on. So single entry system is very simple. And next, move to the next slide. Double entry system. So here double entry system, it's a including of the debit and credit also. It is a fundamental concept in bookkeeping or in accounting, especially present times. This bookkeeping will make the transactions in better way, which means that every debit record there is a correspondent credit entry. When we are making a transaction, we can easy to understand how this double entry system will be helpful for the accountants. So conclusion, a person of accounting knowledge, or he has a good knowledge or is a limited knowledge based on accounting, he can maintain the records as per single entry system. That's not the criteria, but due to some shortcomings in the system, double entry system has been evolved. Almost all the countries of the world also adopted double entry system for maintaining accounting records. So even in this bookkeeping also, transaction recorded immediately when they take place with the help of double entry system. And the main purpose of bookkeeping in the accountancy to record and keep transactions of all business and to helps identifying whether the business is running successfully, and it helps to identify cost incurred, means controlling the cost also, and helps identify the financial position of the business. So the purpose of bookkeeping is very helpful to the accountant to control their investment and control their cost also in proper way. Next, branches of accounting. Here branches of accounting will be classified into three types. These are all the basic accounting concepts, and we are having some other accounting concepts also, but as per our syllabus we can discuss these basic accounting concepts, and it will be going on in each and every organization. So under the accounting concept there are three classifications. First one is the financial accounting, cost accounting, and management accounting. So what is financial accounting? It's based on a systematic method of recording transactions of any business according to accounting principles. It is the original form of the accounting process, and the main purpose of financial accounting is to calculate the profit or loss of a business during a period and to provide an accurate picture of the financial position of the business on particular date. And the trial balance, profit and loss account, and balance sheet of a company are based on application of financial accounting. These are all used by creditors, banks, and financial institutions to assess the financial status of the company. Further, taxation authorities are able to calculate the tax based on these records only. So here financial accounting is the inclusion of the journal, means recording, ledger classifying, and trail balance is summarizing, profit and loss as well as balance sheet comes under the reporting. So all this analysis, all after that financial information, we can be treated as a financial accounting. So this all will be based on the according to the accounting principles. Next we'll move to the next slide. Yes, cost accounting. Cost accounting is evaluating the cost of product or services. So it calculates the cost of the factors of production and to contribute the production of the output in both the manufacturing and administrative factors also. Here, the objective of cost accounting is to help the management in fixing the prices and controlling the cost of production. And it also points any wastages, leakages, and defects during the manufacturing and marketing process. So we'll see this cost accounting also helpful to control our cost. So it will be helpful to the getting the more profits for business. So that's why in this slide it's a cost account deals with the ascertainment, measurement, accumulation, budgeting, and evaluating cost structure of the entity. So cost account is one of the evaluation concept for both product and services. Next, management accounting. So it's also one of the branches of accounting. It provides the information to management for better administration of the business, and it helps making important decisions and controlling various activities of the business. It will be able to take decisions effectively or efficiently with the help of various management information. So here management information systems means budgets, projected cash flows, and funds flow statements also, including with variance analysis reports, cost volume profit analysis reports, and break even point calculation, etc. These are all the comes under the management accounting. So these are all related for making this effective utilization of the financial resources to taking the better decisions for the prospects of the company or business. Yes, next one is accounting concepts. So here accounting concepts are very, so once we look in this slide, there are few concepts in accounting. These are very important: business entity concept, money measurement concept, going concern concept, accounting period concept, cost concept, realization concept, accrual concept, matching concept, and duality aspect of concept. So actually the concept, accounting concept, is nothing but its basic assumptions and rules and principles also, which works as the basis of recording of business transactions and preparing accounts. So the main objective of accounting concept is to maintain uniformity and consistency in accounting records. So then we can move to the various accounting concepts and we'll discuss one by one. Yes. If you focus on these accounting concepts, the first one is the accounting period concept. So this every businessman wants to know the result of his investment and efforts after a certain period. So usually this concept, accounting period concept, usually 1 year period is regarded as an ideal for this purpose. And this period is called accounting period. It depends on the nature of the business and object of the proprietor of the business. And next one will move to the accrual concept. So accrual concept is one of the final concept, and it supports the idea that should be measured at the time of major efforts or assumptions accomplishments occur rather than when cash is received or paid. So this accrual concept is a very different concept in these accounting concepts. And next concept will move to realization concept. So in this concept, revenue is recognized when sale is made. After the sale only we can easy to recognize the revenue. Revenue means here income. So consider the point when the property in goods passes to buyer and he becomes legally liable to pay. When the person buys the product and he possesses the goods or a property, then he is legally liable to pay the amount. And next concept, matching concept. So matching concept determines the expenses associated with revenue are identified and measured. So especially in this concept, the total expenses are incurred during an accounting period. If revenue is recognized on all goods sold during a period, cost of those goods should also be charged to that period. That is a matching concept. And next one is the money measurement concept. So in this concept, only those transactions are recorded in accounting. Only few transactions, like which can be expressed in terms of money. Those transactions which cannot be expressed in terms of money are not recorded in the books of accounting. In this concept, especially expressed in terms of money accounts only, we can easy to record it in the form of transactions. That is the money measurement concept. And next one is the business entity concept. So in this concept, all data is expressed, means business is treated as separate from the proprietor. All the transactions recorded in the book of business and not in the book of proprietor. The proprietor is also treated as a creditor for the business. And another one, going concern concept. So this concept relates with the long life of business. The assumption is, in this concept, business will continue to exist for unlimited period unless it is dissolved the some reasons or other. So it is assumed the entity will continue to operate much as it has been operating for an identifiably long period of time. And another last one is the cost concept. So cost concept is a asset is recorded at its cost in the books of account. So especially only the asset related transactions recorded in the cost concept. For example, the price which is paid to time of acquiring a property. In balance sheet, these assets appear not at cost price, and every year there is a depreciation is deducted and they appear at the amount which cost and less classifications. So cost concepts already we discussed in the branches of accounting. It will be related to these cost concepts and it will be applicable to the factors of production also. And last one is the final one, dual aspect concepts. According to that concept, every business transaction has two aspects. One is the receiving benefit aspect, another is the giving benefit aspect. This receiving benefit aspect is termed as debit, whereas the giving benefit aspect is a credit. So every debit there will be a correspondent credit. So this dual aspect concept we are including to doing a problems in the next problems way. Yes. So accounting is important, but what is the need to know the accounting? So basically here we already discussed what is the accounting, but coming to the need, it is essential if you want to be able to grow in your business. The way you can be measured and predicted, and it has some system to tracking your business assets, liabilities and incomes to make you smart. Informed business decisions based on the past performance and present financial health of your company, the accounting is needed. And coming to the importance, so accounting provides an organization stakeholders with business statements, allowing them to know if the organization is making or losing money. This information is essential in determining company is able to maintaining profitability or not. So the main purpose of accounting is to accumulate and report on financial information about the performance and financial position and cash flow of the business also we can treat in the accounting. So this information used to reach decisions about how to manage the business or invest or lending money to it. That is the main purpose of the accounting. And another slide is classification of business transactions. So before we are going to start the problems, once we can look at this classification of business transactions. Once we understand this business transaction, then only we can easy to do some problems. So there are three classifications in business transactions. So we can call it the types of accounts also. There are three: real account, personal account and nominal account. So under this real account, if you observe this slide, under the real account there are all assets, whether it is a tangible and intangible. Tangible in the sense we can easy to touch, we can easy to taste, that is means physical entity. And coming to the intangible, it do not has a physical entity, and it unless it we can feel it but we can't see. It's a purely quietly opposite to the tangible. So what are the rules under the real account is debit what comes in, credit what goes out. So under the debit what comes in, how much amount is coming to in your account and how much amount it goes out from your company or account. And coming to the personal account, There are all parties, only physical organizations and persons means physical evidence, then only we can treat as here debtors and creditors. Even debtors and creditors also two characteristics, they will be performing according to the situation. So under the personal account there are a few rules. Debit the receiver and credit the giver. The person who receives the amount is called debitor. The person who giving the amount to others, so that person we can treat it as creditor. These are two kind of actions. And coming to the nominal account, here only profit and loss only we can measure. That is called income and expense or expenditure. So what are the rules here? Debit all expenses and losses, credit all incomes and gains. Suppose if a company getting the incur the expenses and losses in their business, so the transaction we can easy to record under debit. And coming to same like incomes and gains, we can record it in credit. So these are the three classification of accounts. When we memorize all these three accounts, we can call it the principles of accounting and classification of business transactions and golden rules of accounting also we can call it. So and then we move to the next slide. Yes, three types of accounts. First one is the personal account, real account and nominal account. So here personal accounting means the transactions with persons are called the personal account. It's a separate account kept on the name of each person and the benefits received from or given from the person in course of dealings with him. For example, Krishna account. If you have a bank account in any other concerned bank, you are having an account. So that account we can treat it as personal account. Here some example: Krishna account, Gopal account, SBI account means organization, financial institution account, Nagarjuna Finance Limited is another institution, financial institution account. Next, Obul Reddy and Sons account is another business account. HTML Limited, HMT Limited, another corporate account. Capital account, drawings, etc. These are all the accounts comes under the personal account because all these transactions with the persons only. That's why we can call as a personal accounts. And coming to the real account. So in this slide there are what is a personal, what is real, what is nominal accounts with examples will be discussed in this slide. So real account is relating to the properties or assets known as real accounts. So all the properties and assets comes under the real account only. So every business need assets such as machinery, furniture and some other properties. For running its activities, definitely that physical properties are also needed. So separate account is maintained for each asset. Here cash account, furniture account, building account and machinery account, these are all comes under the real account. So you are incurred the expenses, losses, or you can incur the amount real account. So all comes under the real account. Next, nominal account. It's relating to the expenses, losses, incomes and gains are known as nominal accounts. It has also a separate account is maintained for each item of expense, loss and income or gain. For example, salaries, stationery, wages, postage, commission, interest, purchases, rent, discount, commission received, interest received, rent received, discount received. These are all comes under the nominal accounts. If a person he is getting the salary from his organization, that salaries will be treated as a nominal account. Even wages also. These are all the three different types of account. So personal account is related to the person, real account is related to the properties or assets, nominal account is related to the expenses and incomes. Here are the few examples. So next we'll move to the next slide. Yes, golden rules of accounting. Personal account, real accounts and nominal accounts. And don't forget these accounts. We are without knowing these accounts means principles, we can't make any problem. We cannot record any transactions in the business. So personal account means there are two, debit and credit. Debit means the receiver, credit means the giver. And same like the real account. Debit what comes in, credit what goes out. Comes to the nominal accounts, under these two, debit all expenses and losses and credit all incomes and gains. So memorize all these golden rules of accounting, then only we can easy to record the transactions in the journals. Yes. So before we are making the transactions, means recording the transactions in the accounting books or problems, first you have to know the what is journal. Actually, the word journal is derived from the Latin word journ, 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 which means a day. Journal means a day book or day-to-day business transactions, because everyday transactions were recorded in the chronological order. And this journal is treated as the book of original entry or a prime entry or first entry in the business. So all business transactions are recorded in this book before they are posted in the ledger. So what is the ledger, we'll discuss in the next slide. So coming to this journal is a complete and chronological order, means we can easy to recording the transaction in order of dates, day by day transactions related to the business, and in systematic manner. This process of recording a transactions in the journal is called a journalizing. These entries made in the book are called journal entries. So this is the first step in accounting. It is a record of all the transactions in the books of original entry. So here in the problems in this unit we can posting the entries in the journal. So in the accounting cycle there are different phases. First one is the journal, that's what we are discussing now, and another one is the ledger, and next trail balance, and then finally we will go for the financial statements. This is the accounting cycle actually. So here in this slide I am giving pro forma of journal also. So if you are making a problems, you have to write the journal entries in this pro forma only. So we look at this pro forma, there is a date, particulars, and next debit and credit also. So LF is ledger folio in between. Date means year, month and day, number. So based on that, what are the transactions will be happened, that's what we are entering under the particulars column. The narration means what is the purpose we are making these transactions, to whom, that what we can easy to make the narrate in the particulars. So how much amount we are incurred, how much amount we are given, everything will be recorded into the debit and credit. So this is the journal pro forma. And next we will go to the another one, that is called ledger. So ledger, after the completion of journal only we can make a ledger. So this ledger also contains records of business transactions and maintain a separate record. The general ledger is assigned to a specific asset, liability, equity item, revenue type or expense type. Example of ledgers are accounts receivable and inventory. For example, if you have a cash account, sales account. So based on the item we can make the separate account for that. If you have a person, Rama account we can make, and then only we can post the total Rama entries under the ledger account. And same like that SBI account, this all comes under the personal account, already we discussed in the golden rules of accounting. And if you like a salary account, that is comes to the real account, cash, like that. And any expenses or any incomes, that comes under the nominal account. So based on the separate accounts we can easy to make the separate accounts for the ledger. So after the general only we get the good clarity to prepare the ledgers. So the ledger is designed to accommodate the various accounts maintained by the trader. So it contains the permanent record of all transactions. So ledger is a book which contains various accounts, and it is a process of transferring entries from journal to the ledger is called the posting. We already posted the transactions in the journal, then we have to transfer total entries to the ledger. This process we can call as a posting. So in this slide we are giving pro forma of the ledger. This is the double entry system, dual aspect concept. So left side it's like a T diagram. If you observe this, the middle of it called it shows like a looking like a T. So date, particulars, journal folio and amount is the left side, means is called treated as a debit side, and date, particulars, ledger folio and amount in right side is treated as a credit side. We can make a difference on that, debit and credit. So based on the account, if you had a sales, you can make the transaction, means note the transaction. If you receive the cash from the other person, you can make the note the transactions in the systematic manner. So that is called the ledger. Next, trial balance. So here trial balance is a list of all the balances standing on the ledger accounts and cash book of a concern at any given date. So after the completion, means after the posting of the journal and ledger, then we'll directly go to the trial balance. So in this trial balance is very helpful for, means easy to knowing the knowledge about the final accounts. So final accounts, first step we are going to trading account. Before that we have to go for the trial balance. So trial balance is a list of balances, and it's a statement of debit and credit balances extracted from the ledger with a view to test the arithmetical accuracy of the books. So the list of balances of ledger accounts and cash book of a business concern given date, we can make the entries. So this is the pro forma of the trial balance. So trial balance for Mr. Kumar as on so and so date, that is the heading, and then we can go for the serial number, name of the account is particulars, debit and credit, basically amounts. So what is the capital? Capital will treat as a credit or debit, okay, or sometimes it's a loan, and which comes under the which category of the asset. These all things we can easy to specify the trial balance. Next slide is the final accounts. So in this final accounts we are making the transactions like trading account, profit and loss account and balance sheet. These are the three things we are doing in problems and final accounts. So the first step is the preparation of final account is trading account. The main purpose of the trading account is to ascertain gross profit or gross loss as a result of buying. So why are we making the trading account? Means we have to know we are getting the gross profit or gross loss. That's why we are making the trading account. So under the trading account we get the total factory details, means what is the opening stock, what about the purchases, wages, freight, to all the factory expenses and gains to be noted in the trading account. And another one is the profit and loss account. So in this business, any businessman also interested in knowing the net income or net profit. For example, if you are started a business, definitely you have to eagerly waiting for you are getting the profit or loss. Same like that, every businessman also to know they are getting the net income or net profit. So it's represent the excess of gross profit plus other revenue incomes over administrative, sales, financial and other expenses also. So the debit side of profit and loss account shows the expenses, and the credit side the incomes. If total of the credit side is more, it will be the net profit, and if the debit side is more, it will be the net loss. So what is the purpose we are making a profit and loss account means we have to know we are getting the net profit or loss. And finally we are coming to the balance sheet. This is the second point of final accounts. It is prepared often in the trading and profit and loss accounts, and it has been closed. So balance sheet may be considered as a statement of financial position at a given date. So in this balance sheet is an item wise list of assets and liabilities and proprietorship of business at a certain date. So balance sheet measures the exact financial position of a business. So why should we prepare balance sheet means we have to know the financial position of the company. Once we look at the any company balance sheet, definitely we can easy to make a note that company is in the financially sound or not, means financially good or not, we can easy to know. So how can we know with the help of the balance sheet means it's a statement which sets out the assets and liabilities of a business firm and which serves the financial position of the same on any particular date. The left hand side of the statement is the liabilities, means based on the capital, and on the right hand side all the assets are shown. There are two sides of the balance sheet would be equal, then only the balance sheet will be tally. And the main advantage of the balance sheet is it helps to checking the arithmetical accuracy of book of accounts and to preparation of financial statements, and we can easy to detecting the errors also, and it is possible to find out the balance of various accounts at one place. So that's why balance sheet is helpful to know the financial position of the company. So these are all about the theory part of the final accounts and financial accounting in fourth unit. So what are the problems we are having, like journals, ledgers, next final accounts. So that's we earlier discussed trading account, profit and loss account, and balance sheet. We will go through or discuss in online classes with help of the Cisco WebEx. I hope you all understand these theory subjects. If you have any doubts, you can feel free to ask the doubts. We'll clarify your doubts. Thank you.